When it comes to personal finance, emergency funds have long been touted as a foundational step toward financial independence and financial freedom. The advice itself is simple, and if you've been learning about money for any amount of time, you've probably heard it before. Save 3 to 6 months worth of living expenses in case of unexpected life events like medical emergencies, car repairs, or a job loss. This guidance is well-meaning, but many people are finding that their emergency funds are missing the mark in today's economic climate. Let's explore 3 reasons why the traditional emergency fund may be falling short and how you can adjust to better protect yourself and your family financially. 1. Inflation outpacing savings. Inflation is the general increase of goods and services over time, and it steadily chips away at our purchasing power. The cost of groceries, utilities, housing, and healthcare has skyrocketed, making it more expensive to live and even harder to save. The problem is in recent years, inflation has increased sharply, so an emergency fund based on your expenses from 2 or 3 years ago might leave you severely underfunded today. How do you solve for this? You have to regularly review and adjust the amount you save. A good habit is to check your expenses every 6 months or so and update your emergency fund target to reflect any major changes in your cost of living. Check in with yourself that you're not succumbing to lifestyle inflation. This is the tendency to spend more as your income increases. While some increase in comfortability is expected, be careful that you're not just spending to spend. 2. Birth of the gig economy and job instability. With the turbulence of the last few years economically, many people are now part of the gig economy, freelancing, or working multiple jobs to make ends meet. This creates an unstable income stream, where layoffs and job scarcity can have a much more severe impact on a person's finances as opposed to those working in more traditional salaried positions. In these situations, your emergency fund may need to be more robust than previously recommended. If your income is unpredictable or coming from multiple sources, having an emergency fund closer to 6 to 12 months of living expenses is generally advised. Yes, this is a much larger goal to achieve, but having the ability to pay your expenses for closer to a year should you lose your gigs or side hustle work would provide more security and help reduce anxiety. 3. Too narrow a view of emergencies. The advice around emergency funds typically focuses on covering the basics: rent, food, utilities, and healthcare. But many overlook less obvious but equally important financial obligations, like student loan payments, insurance premiums, or even pet emergencies. These costs can derail your finances just as quickly if they're not accounted for. When calculating your emergency fund, include every expense you couldn't skip in a crisis, even if it's not obvious. A true emergency fund should cover everything essential to your current lifestyle, not just survival. Now remember, you'll be cutting out a bunch of the fluff, those things you splurge on right now, like multiple streaming services or eating out, so you can reroute that money to helping cover intermittent expenses like car insurance and HOA fees. Emergency funds aren't one size fits all. The key is to tailor your safety net to your unique financial situation, taking into account your cost of living, your income, and the types of emergencies you're most likely to face. Building your emergency fund of any size is easier when you're able to consistently put money away. For this to happen, saving must become a habit. Here are a couple of ways to help boost your fund. 1. Budget. Think about all of the essential and necessary expenses you'd have to cover during leaner times. Not just your day-to-day expenses, but those irregular payments that you must still cover. Using a budget will help you figure out what you'd cut or reduce during a financial emergency. 2. Set a goal and allow a little flexibility for it to adjust to rising costs and inflation. You generally won't be able to have a fully funded emergency fund immediately, so start small with consistent contributions. Find things in your budget to trim back or eliminate and prioritize saving in regular intervals. 3. Automate your savings. The easiest way to save money is to never spend it in the first place. Open a separate account from your regular day-to-day checking account and have a portion of your income automatically routed to that savings fund account. You could have money moved over weekly, monthly, or every time you get your paycheck. The aim here is to set it up and don't touch it. 4. Take advantage of cash influxes. Maybe you get a bonus at work or you're expecting a tax refund, but these times can be some of the largest checks you may receive all year. Have a plan to put aside as much of these as you can toward your emergency fund. It will be tempting to spend it, but saving that money will help you establish your emergency fund even faster, giving you the security of knowing you've got yourself on more financially stable ground. 5. Prioritize it. Don't be afraid to increase your contribution amount or rate to help you get to your goal faster. And if you have to dip into it, then focus on building it back up as quickly as possible. Remember, this account is for emergencies only, like your car breaking down, your water heater breaking, or a medical bill. It is not for investing. Building an emergency fund is a critical part of financial wellness. It's there to protect you from the unpredictability of life, but it's not something to just set and forget. You want to check in and ensure there's enough in there to serve and protect you. This approach makes your emergency fund more resilient, helping ensure that you're better prepared for the unexpected, even in today's unpredictable economic climate. Your emergency fund should provide the peace of mind you're looking for in an uncertain world. Thanks so much for watching. If you enjoyed the video, please share it with a friend. Don't forget to like and subscribe, and we'll see you in the next one.